Welcome back. We're looking at numbers now at Essar Ports. The company's profits have multiplied many-fold, and that's why the stock was really excited even in a down market yesterday when there was carnage taking place all around us. You can see some of that gain continue this morning as well. Rajiv Agarwal, MD of the company, is now with us. Mr. Agarwal, morning. Thank you for joining in. Profits increasing by the manner in which they have. Can you take us through the highlights and what's responsible for this huge rise?
Well, the current quarter looks good. We have had an increase of almost 10 times in the net profit from about 3.5 crores to about 39.5 crores in this quarter. This comparison is strictly between the ports business, which was there in the consolidated ESPLL as it existed in the corresponding quarter. The main reasons for this improvement has been a 61% increase in the top line and a 75% increase in the EBITDA number for this quarter, which has resulted in an increase of 10 times in the net profit. This increase in the top line has come mainly because of increase in volume. The billable volume has really gone up from about 10 million tons to 12.6 million tons. And the rate has gone up from about 176 rupees per ton to 220 rupees per ton. And we have also operationalized the expansion project of 12 million tons at Vadinar. So these three factors have really resulted in 61% increase in the top line. So these are the main reasons why we have had this increase in the results.
Okay, let's talk about margins, because you've seen an increase in margins as well. Are these sustainable levels for your EBITDA margins?
Well, the margins are increased because, you know, the mix of bulk, dry bulk has gone up a little bit in the overall numbers, and also because, we have also got the new project implemented of 12 million tons at Vadinar, where we have implemented another product jetty and 1 million tons of tankage capacity. So these are the factors which have really helped us in increasing the realization in overall terms.
Okay. Are we going to see more volumes continue to pile up like the way they have in Q1? What is your plan as far as capacity addition is concerned?
The next increase is expected in the last quarter of this fiscal, where we are starting the iron ore terminal at Paradeep, which is a 16 million ton facility, taking our overall capacity to 104 million tons by March 2012. And then we have Salaya 20 million tons and Hazira expansion 20 million tons and another new coal terminal of 14 million tons at Paradeep. So all this put together, we go to about 158 million tons by the year 2013-14. So that's the plan, and it's on schedule. We will be able to start these projects in these timelines, and we are working on these, and the projects are in various stages of implementation.
Okay. Let's talk about revenues as well, because a lot of your revenues are still coming in from the group as such, the Essar group. What is your plan? How much of revenue is going to be non-Essar in terms of fresh clients getting added?
Well, at the moment about 98% is from Essar group, and going forward in the next 2-3 years we will be able to do about 25 to 30% business from non-Essar group companies, especially in Paradeep, both at the iron ore as well as in the coal terminal, and also at Hazira and Salaya and Vadinar. So all put together we should do almost 25 to 30% of business from non-captive sources.
Can you give us an outlook, sir, for the current financial year in terms of total revenue growth or perhaps profits?
Well, FY12 we have had a 61% growth in top line in this quarter, and we hope to continue the trend.
Okay, all right, Mr. Agarwal, we'll leave it on that note. Thank you for joining in today. Essar Ports looking at some heady growth numbers in the future as well. They hope to maintain 61%, says Mr. Agarwal.